Hi, I'm Terry, Fund Manager for the Passive Portfolio range at AJ Bell, and I'm here to run you through the events of the final quarter of 2020 and discuss their impact on the performance of the AJ Bell funds. After a robust third quarter where markets in the main continued their bounce back from the worst of the falls due to the coronavirus pandemic, the team entered the final quarter of the year hopeful for a continuation, but conscious of some key geopolitical events remaining on the horizon. These included the end of the Brexit transition period, with a trade deal remaining unresolved between the UK and the EU, and also the US presidential elections in November. Ahead of these events, the team left positioning unchanged, believing the funds were adequately set up across both geographies and sectors. Pleasingly, this proved to be the case, as the UK subsequently did agree a trade deal with the EU. Joe Biden's victory in the US election didn't have too much of a market impact, and markets globally were lifted with news of success in the search for a coronavirus vaccine. The positive outcome of these events meant that Q4 was, in the main, a good one for markets. Stocks in particular enjoyed a strong quarter as investors looked ahead to 2021 with hope that the worst of the pandemic is now perhaps behind us, and with more confidence in a stable political period in the UK, the EU and also the US. One of the themes of the last quarter was sterling's strength against other major currencies, in particular the US dollar, and this continued to be the case in Q4, which saw it gain further ground on global currency markets. Ordinarily, a stronger pound would weigh on the UK stock markets like the FTSE 100, which are dominated by multinational businesses whose international revenues are reduced when they are converted back to the stronger pound. However, in this quarter, the positive vaccine and Brexit news overrode the currency impact, and the FTSE 100 and FTSE 250 both had very strong quarters, up over 11% and 18% respectively in the period. The AJ Bell funds are made up of different combinations of stocks, bonds, cash and property, with the allocations to each asset class blended between the UK and international holdings. Whilst international stocks and bonds were positive in the quarter in their own currencies, these returns are reduced in size, and in the case of some bond markets even turned negative when they were converted back into a stronger sterling. This currency translation impacted all funds in the range to varying degrees, depending upon the stock to bond and UK to international mix. During the quarter, we made no changes to the allocations or the underlying holdings that we used in any of our funds. However, we were delighted to add a new fund to the range with the launch of the new AJ Bell Responsible Growth Fund in November. In this fund, we have constructed a diversified portfolio favouring companies with strong ESG, that is environmental, social and governance credentials, which we look forward to providing a first quarterly update for at the end of Q1 2021. With 2020 now firmly in the rear-view mirror, the team were pleased to see all of the funds post positive gains in the quarter, and, in the case of the growth-based funds, also over the full year. All funds with a 3-year track record also remained either first or second quartile performers in their respective IA sectors over the 3-year period. Given the challenges faced by investors in 2020, it was great to see markets round out the year in strong fashion, recovering and even surpassing the levels that we were at before the pandemic in some cases. However, valuations remain stretched in many markets relative to their historical norms, and with that in mind, the team are currently working on updating the asset allocation for the portfolios, which we will look to implement and update our investors on in due course. Thanks for watching.